Ian, we have a lot of clients who are asking questions about inflation, worried that they're going to get hammered.
I got some tools to deal with inflation. Coffee?
Let's go. So inflation, we're hearing a lot about inflation. It's all over the news, it's all over the web, it's all over everywhere. And I know that we've had a lot of clients who have a lot of anxiety around how that may pertain to their property moves and goals for this time. How do you walk clients through sort of the current economic inflationary situation?
Sure. Well, I think if we were to talk to any expert in financial industries, economists, financial planners, none of them are going to say that inflation is a good thing. However, it doesn't have to be a really bad thing if you take the right strategies. And there's really two strategies that I would recommend to clients to hedge against inflation. One seems kind of contrary, and we'll do that one second. But the first one is to own assets. And in reality, whenever we recommend purchasing assets, owning assets, there's room in anybody's portfolio for some experimental stuff, for high risk stuff. But there's really two types of assets that most of the wealthy people in the world have used to build their wealth, and that's putting your money into public markets, stocks, equities, public equities, blue chip stocks. The other one, of course, is real estate. Now, the reason that in an inflationary market you need to own stuff is if you have $100 today, what you could buy with that $100 today, in a few years you might only be able to get half as much for that $100. So if all your money's sitting there in cash, you're depreciating what the value of that cash is. But in an inflationary economy, because the value of the dollar is going down, the purchase price of the stocks of that's why we say blue chips, because if you're in a high risk stock, it could crash to zero. But if you buy companies that are very unlikely to go away, then as inflation happens, the stock value is going to go up. Now, the perceived value of the stock may even be the same because the money's worth half what it was, but you've protected your money because your money's gone with the stock. Same thing with real estate. We're seeing that right now. Real estate prices are going up significantly. So people who put money in a house within the last few years, sometimes they've made large jumps in terms of equity, and they've protected them with inflation, whereas someone who was, say, just renting a home, they have actually seen the value, they've seen the value of their money go down. They've lost out on that equity, which for some people in here, in the Silicon Valley and along the coast, the markets we serve, we have clients who bought not that long ago and got $500,000 in equity, $1 million in equity, sometimes $2 million in equity, just by having purchased a home. And they didn't know that, but in this inflationary economy, they're going to continue to benefit from that.
So I know that we've talked, if anybody's seen our videos before, we've talked a lot about this escalator effect where, the property market, the real estate market long term is like an escalator. And so, if you miss your opportunity to get on, it keeps going. So it sounds like that is potentially enhanced during an inflationary period. Would that be accurate?
Absolutely. And what's really interesting about real estate, so real estate, and I'll get into this, because the second strategy to hedge against inflation, that's the beauty of real estate. And there are ways to leverage the second strategy with stocks and equities as well. But with real estate, you can leverage the second strategy to hedge against inflation, which is acquiring debt. Now, I don't mean go out and charge up a bunch of credit cards. I'm talking about secured, low interest debt. Mortgages being one of the best and something most people have access to. Especially if you own a property or you're buying a property, you can take a mortgage. Now, if you secure a mortgage rate, let's just say, for easy purposes, say 3%. Now, say the inflation's at 10%, the value of the money is depreciating. So you've just acquired this debt. Let's say you take $1 million mortgage. You've just watched the perceived value of that mortgage has dropped, meaning you actually technically owe less money, even though it's the same number on paper. You own less in terms of value back just by holding that debt. And again, there are other ways people take loans against stock portfolios and stuff as well. And we'll talk about that in other videos. But the reality is, if you have debt, with real estate, if you buy a house with a mortgage, you can double dip on both strategies. So your real estate is going up in value and your debt is dropping in value. So you're actually able to take advantage of both the owning something and the debt strategy just by purchasing real estate.
Fantastic. Well, thank you for sharing that with us. If you got something out of this, again, like, share, subscribe, and any comments, any questions, anything that you'd like us to cover in the future, feel free to leave it in the comments. I'm Laura Batra.
And I'm Ian Batra.
And this was Coffee Talk.